Hello, my name is Sudeshan and I'm on the customer success team here at Figured, and today we're going to take a look at how to create a scenario and your opening position. So what we'll be doing today? Today we'll be looking at creating a scenario and choosing the length and type, importing a starting position using your existing Figured data, and also creating an opening position by adding in your assets and liabilities. So let's get started. So the first thing you'll need to do is have a financial farmer subscription with Figured, and head over into your main menu and click on the scenarios icon as is highlighted on the left, and then once into the scenarios menu, click on the big green Get Started button. Once you've done that, you'll be on the Create New Scenario window. Here, you're asked to enter in your name, type, description, start date, duration, and the type of farming operation you're going to be using. Now, what you will find is your duration can be anywhere between 2 to 10 years, and your sharing options are private, shared, or the organization that you're under if you are an accountant with Figured. Now, you will notice that the name of the scenario is status quo. So what we do recommend here at Figured is creating a status quo scenario, or a scenario that is business as usual for 3 to 5 years. We will then use that as our baseline, which to copy and create new scenarios that model any upcoming changes. Once you've selected that, select Next on the bottom right, and you'll be able to get started. The first thing we want to do is select a starting point for our scenario. As you can see, we have two options here. One, to import and use My Farm data, the other to start from a blank scenario. The importing and using of My Farm data is great if you've been collecting data in Figured, either through your trackers, or if you've been a zero user for some time and have a lot of zero coded transactional data. So click on Import and Use My Farm data, and then when you're able to choose your options, your data type should be actuals plus forecast, should be the only option. If you do have budget, then you are able to use budget data as your starting point as well. However, for this exercise, we'll choose actuals plus forecast, set your year to the current year, and actuals to the last month, with this month being March. We'll get it to the end of Feb 2020. So basically what that means is we've got actuals up until the end of last month. Down the bottom, another really important part is to bring in any existing trackers or expenses that you have in Figured. So the trackers will be any existing trackers you have. Would it be a milk tracker, dairy cattle, and the other income would be any other income positions that are being collected through Figured. On the expense side, you'll be able to bring in your full expense position. This comes through from zero. So if you have been using Figured Lite to date, you're still able to bring in all those expenses that have been coded in zero. Once you're done with that, on the bottom right, click on Import and Create, and then we can take a look at how to add in some assets and liabilities. Once you've created your scenario, you'll be taken into the Assets and Liabilities window. Here, as we can see, we're asked to enter in the assets we have on hand as well as the liabilities. Now, it's best to do this either in conjunction with your accountant, or if you are the accountant, to do this off of the most recent balance sheet. So the first thing we will see here is that the dairy cattle on hand has been pulled in. So if we've chosen to import data, if we've got a stock tracker, it'll bring in that amount of stock on hand and add a capital value to it. And if we click on that, we can very easily see the amount of stock that has been brought in from the current existing tracker in Figured. The next thing we want to do is add in a new asset. So over on the left-hand side here, under Add Asset, I can choose from a list, and the first one we're going to do is rural property. So enter in rural property. You can have that be any name that you want. Specify a total effective area, and then enter in a price. And then for this exercise here, we're going to do 3.5 million. And as you can see, nice and easy, 3.5 million has been added in. Now let's do another asset. Now we're on the bottom left here, Add Asset. I'm going to go again, and this time we're going to add in machinery and equipment. You can say milking equipment and make the value of that 150,000. So as you can see, it's very simple to add in any new assets. You can go ahead and keep clicking on Add Asset until you've completed your entire asset position. Down to the next section, we've got an Add Liability. So I'll click on Add Liability as well, and we've got a few different options under Type. And we've got overdraft, bank loan, home, family loan, and hire purchase. So we'll choose bank loan for this, and we'll say rural property. And we'll set the opening balance right now at 3 million. And we'll copy that balance over onto our facility limit as well. If you do obviously have a variance between these two, then you put that in as requested. Now for most mortgages, we're going to put in table. If we're happy, we've got a nice rate of 3.95, and we'll say that's over 30 years. And then go ahead and hit save. And as simple as that, we've added in an opening liability. Now we might also want to add in our overdraft position if we do have one. So we can say we have an account that's overdrawn by $20,000, and we can say we have a total facility limit on that of $50,000 and at an interest rate of 9.95, for example. Now your utilization is basically the amount or the average percentage that you are overdrawn within a given point in time within a year. So if you've got an opening balance of 20,000 with a limit of 50,000, that's kind of where you sit. You'd put in a percentage reflective of that. If you don't know what that is, you're going to set it to be at 50% and hit save. And there you go. As you can see, very easy to add in new items. And once you've done completing your liability position as well, those two combined together will give you some handy stats down here, such as your equity percentage and your loan to value ratio. Now, you might already know what some of these are, so it's a good way to sense check and make sure you've added in the right amount of information. Thank you for listening, and please do tune into our next video on how to edit your proposition and add in income and expenses in a scenario. Thank you.